Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Strong, the Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Today being Monday, and it's the 15th of November 2021. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. This afternoon, in the US Open, we will have a live scalp this afternoon, so I just want to let you know that if you have a moment and would like to join, I can confirm this afternoon we will have the live scalp. Yes, so at the moment, Howard, we've just got the DAX as a consistent, the DAX Open as a consistent webinar. We're not having the London Open anymore. That's been cancelled. I am sort of working on how to evolve it into this new push for online content, and then whilst I won't be able to commit every day to the live trades in the afternoon, we will have one this afternoon. And just bringing up our market commentaries disclaimer. And just our reference as market scope 2.0. All right, let's bring up our chart. Here is the DAX. Just before we get into the analysis, I'd like to go through the CNBC morning note. And it says as follows: European markets are set for a flat open today as investors search for direction amid a steady drip of economic data and corporate earnings from the world. Global markets in recent weeks have been guided by corporate earnings along with inflation and labor market data from the major economies. And this is to have a significant bearing on the policy path for central banks. And of course, the big question just around that is just how on track are the central banks in terms of current economic numbers? Are they behind the curve? And there's quite a debate going on at the moment. Some still maintaining a transitory inflation environment, others saying, well, no, the inflation's gone on for longer than expected, and it's now broader than expected. So still being debated there. Shares in Asia Pacific were mixed overnight, with mainland Chinese market lagging despite Chinese economic data coming considerably better than expected. Just with regards to China, I did an article, it's on our website, I did it either last week or the week before. The Chinese stock market's been absolutely hammered in 2021. It's a gross underperformer. But that being the case, you've got your value investors now taking a good hard look at the Chinese stock market, and I think it was JP Morgan and Goldman Sachs that have both suggested that there is a massive discount in the Chinese market. So just want to point that out. I think from our point of view, you know, it's kind of like trying to catch a falling fridge at the moment. You want some sort of stabilization, and you want the sort of the value investors just to show the support, which is lacking at the moment. Stateside stock futures were flat in early pre-market trading after the S&P 500 snapped a 5-week winning streak on Friday. Back in Europe, Swiss private bank Julius Baer is set to report third quarter results today. Airbus over the weekend trimmed its 20-year commercial airplane demand forecast by 0.5% compared to pre-pandemic projections, while lifting its outlook for freight carriers. On the data front, a flash estimate of Eurozone consumer confidence data for November is due to be published shortly before the closing bell today. On Friday, there was a big miss coming out of the US consumer confidence. On the agenda later in the week are flash third quarter Eurozone GDP estimates on Tuesday morning and the annual European Business Summit in Brussels. Okay, let's take a look at the weekly chart. So there's no, I don't think we can doubt the bullish sentiment in the swing over here. The way that we analyzed this market was as follows. We looked at the reference candle. So we looked at this reference candle here. In other words, this was the candle with the lowest low, and then it was confirmed with condition 2-3, right, which is moving above the reference candle's high and closing above it. And since then, the market's actually been fairly good to us. It's cooperated with the analysis. As mentioned last week, I'm not fully comfortable with this chart because of the lack of trend. Whilst I certainly am grateful that the pivot here has worked out, we've only got 3 points. One, the high here, the low here, and the high here. We've only got 3 points as opposed to 4 points. And in technical analysis, it's a big deal, and because that's what a trend is. It's kind of 1, 2, 3, 4. So kind of we want to label something like this if it's going to be a bull market. So in that vein, of course, we don't predict. We react. The market is moving up until the correction ensues. Right now, we are on the swing 1-2. Okay, but at some stage, I would hope there is a pullback, and I think that the market would be the better for it. I think the news coming out of the media is going to be, well, the market's run ahead of itself, it's pulling back. No, the usual stuff coming through from sort of pundits, that's fine. But as long as it makes a higher trough and then moves into the high peak, then the uptrend is on. Okay, so we are missing one label here. Now, I like the stochastic. I like this position. It's moved from below 80 to above 80, and above 80 makes all the difference mathematically. Over the weekend, I was quite disappointed to see that the notes out of or the reference to technical analysis in the CFA curriculum, I think it's only done in level 1, was revised. It's been revised. With now, previously they were calling for the 80 level to be a momentum push. They're now calling it overbought, and that's not right. It's not right. There's no overbought condition in stochastic. Mathematically, it makes 0 sense for it to be overbought. So the idea here is that we've moved into this 80 area, and now we want to see it hold. Let's see it hold. Okay, if it holds, that is underlying momentum. Take a look here. See, that is not overbought. That is a momentum push, pushing the DAX up. There's the swing. That's where the magic happens. Okay. Now we did go overbought over here, and we went overbought over here. So the RSI does a much better job. So mathematically, I could understand why overbought, oversold conditions coming to the RSI. So you can see the pullback here. It corrects, kind of doesn't pull back, but it just moves sideways here. It corrects. That makes perfect sense. Okay. The fact of the matter is the stochastic doesn't give those signals. It's not designed to give those signals. So the idea is we've moved into a terrific position on the stochastic, and we are not overbought in the least. Okay, so that's a healthy place to be in. The pullback still has to ensue at some stage, regardless of whether there's froth or not. The definition of a trend: higher trough, higher peak. That's an uptrend. If you want to look at a downtrend, just go through to the euro. We bring up the euro here, and you'll see a downtrend, a long-term, a primary trend. Okay, lower peak, lower trough, lower peak, lower trough. So you can see the and look where the stochastic is here in the bottom quintile. Okay, so let's just go back to the DAX. All right, so notwithstanding the fact that at some stage there has to be a correction, there is a positive swing on at the moment. Let's go down to the daily. All right, and on the daily time frame, we are in our bullish area, and let's just examine the price over here. So let's just zoom in. Okay, so here is our reference candle. Okay, so condition 1, the lowest low in at least 3 candles. All right, and I think to be conservative, we just want to get a break above there. So we'll just see if we get a break above there to see if there is an impulse going on here as well, a bullish impulse. Nevertheless, we are in zone 1, and we've got a strong looking stochastic as well. On the daily chart, we're not overbought, but just watch it. Okay, we're tending towards some froth there. So let's just reiterate, we've got a bullish movement here. We've got a bullish area here. We've got a nice looking momentum here. But that brings us down to our hourly chart. Now, there has been a shift here. If we take a look at most of the price action last week took place in this kind of a range. Okay, this kind of a range. So here's the range there. Well, we've sort of evolved into another range, a sort of a miniature range here. Okay, so we'll just kind of see how it develops. So we've broken out of this range. Now, what we want to do is see if that shift up is bullish in nature, and the way we're going to assess that is with our triggers. Okay, so the first trigger is our exponential moving averages. So we want to see a bullish cross there, the green to cross above the orange. We want to see the stochastic cross positively as well. So neither of those triggers have been pulled yet. Those are the bullish triggers that would put the lower time frame market participants in sync with the higher time frames, which is what we're looking for. So once we get the triggers here, well, let's say it, if we get the triggers here, then the next thing, of course, is to keep an eye on the momentum. So we want the momentum to hit, again, the 80 level and hold. And I'm just trying to find a really, here's a nice one. Okay, so this one over here hit the 80 and held. There's a nice swing. It's kind of battled since then. Over here, it stayed above 80 for a fair amount of time. But if it hits the 80 and drops, like a sort of an upside down V, like, that's no good. That's no good, because then we're not getting the momentum to put in the direction of the longer term trends. So the triggers are kind of the first part of the trade. That has to happen clearly. And then the stochastic, the momentum, is representing the underlying momentum, which has to be there for a trade to have a chance of success. If there's no momentum, we won't have the that opportunity. It goes without saying that one needs to use a stop loss, and of course one must use money management. Okay, so the cash market's just opened. So you can see that we're getting a nice push at the moment. It's very murky at the moment because it's the first day of the week. Algo is kicking in, EA is kicking in, limit orders kicking in. Let's just give the market some room to settle. And once it settles, do we have those triggers? If we have those triggers, are we moving towards the 80 level here? If we are, well, then the fact that we've shifted from a lower box to a higher box, well, perhaps that's indicative of a bullish day ahead. Any questions, please go ahead and type this through. Anything you need to ask, go ahead and type those through. Just remember that we will have a live scope this afternoon, so please join me for that. All right, I don't see any questions, so I'm going to conclude here, and then I'll speak to you guys this afternoon. Thanks very much.